everyone. The Virtual Investor here. And today I'm going to talk a little bit about what's driving the real estate market, where we are in the market, what inventory is looking like, and where things are going to go from here. So right now, inventory stands at 571,000, which is well below the average of 1 to 1.1 million homes on the market. So still have a severe shortage. And this time of year, we normally are dropping down, and we are dropping down. Year-end expected inventory, according to Altos research, is around 520,000. It's a little bit below what we got now, because typically people either are finishing selling their homes this time of year and not putting additional inventory on the market. They're going to wait until next year, whether it's January, February, March, and then they'll start adding inventory, and you'll see inventory start rising at that point. One piece of good news that happened this past week is the rates dropped down from 7.22 to 6.62 in one day. And that came off of inflation data that was a little bit better than anticipated. Not a whole lot, but a little bit better than anticipated. So that dropped the 10-year T-bond price, and mortgage rates dropped a little bit, which is great, considering we are in a 100% interest-driven market. So the higher rates go, the more inventory is going to increase, and the more things will sit, and the more prices will drop. If we continue to get drops in the mortgage rates like we had last week, then we'll start to see things spur a little bit, and it'll push a little bit more demand into the real estate market from end buyers and also from investors. Because right now you have a lot of investors just sitting on the sidelines. I myself am not. I'm betting, and this is just a calculated bet here, that interest rates are going to fall a little bit further and be solid into early next year. If we can get into the fives, we'll be in real good shape as far as real estate market goes into the spring market. So I'm picking up inventory now in hopes to sell it, obviously, either early in the year, or late this year, or even in the spring market if we're going to do a fix and flip on a particular property. So that's where my bets are right now. And the reason I say that is we have a lot of information going on in the market. We have job losses really hitting hard, especially in the tech sector. We are bleeding jobs in the tech sector. Amazon is dumping jobs. And this is not the time of year Amazon is normally dumping. They're normally hiring, gearing up for the holiday season. Instead, they're doing the opposite. And we've got all the major retailers really decreasing the employees, right? And cutting employees and cutting management. So all of them are cutting their expenses. And with that, I see big unemployment, and that's a big problem for the Federal Reserve. So they're going to have to reverse course on their interest rates. Coming up here in December, there was talk of a 3/4 inch rate cut. To me, that's completely off the board. I don't think they're going to do 0.5%, 1/4%, if anything. And if they're smart, they'll actually do nothing and see what happens. Because remember, when they made these cuts, when they started making these cuts in spring last year, there's a 6-month lagging effect for when it actually takes place. So what we're seeing, that slight decrease, is what we're seeing from 6 months ago in inflation, right? That slight decrease we had in inflation. And hopefully that trend continues. We'll see. Hopefully, knock wood. I know food isn't getting any cheaper. I know fuel isn't getting any cheaper. So that's going to stay pretty high and consistent. Of course, the government doesn't use those factors when they're factoring in inflation. They're looking at other stuff. So hopefully the numbers drop, and as unemployment numbers go up, the Fed's going to have to reverse course, and then they're going to start dropping rates, and then you're going to start seeing the 30-year T or the 10-year T bond drop, and then mortgage rates will drop with it, because the mortgage is directly tied to the 10-year T bond. So remember that. It's directly attributed to the 10-year, nothing to do with the short-term rates, although they do have a factor in the whole market, right? Because you have the stock market that gets driven by this, and they're trying to create, the Federal Reserve is trying to create demand destruction, which they're doing, but the stock market's kind of build it in. So it's still kind of trading sideways, a little bit going up, a little bit going down here or there. It has some big dump days and some big up days. Crypto market, same thing, but we got a lot of other stuff going on in the crypto market with the collapse of FTX, and that is just starting to play out. You're going to see a whole lot more going on through the end of the year, and hopefully next year we get into a more positive market in the crypto space. We will see there. Gold and silver, still good plays, always good for, safe haven. If you don't know what to do with your money, probably don't leave it as cash. Maybe buy a little bit of silver and gold if that's right for you. I do buy silver and gold as well. But real estate is what I'm continue to buy right now. So real estate is my play. I feel it's going to be solid in next year. I feel rents are still going to be solid in the markets I'm going into, right? Because my markets are Florida, which is still high demand and still a lot of people moving here. Tennessee, again, same thing there. Wyoming doesn't have as high demand. It's such a small population in that state, but rents are still really good because there's just a limited inventory of housing there. So those are the markets I'm going to focus on, as well as Texas. Texas outside of Dallas is where I'm going to focus on. Dallas is taking a little bit of a hit because it has higher inventory right now, but overall good long-term market because there's just a lot of jobs down there. And as people lose jobs, they might be forced to move to an area like Dallas or Tennessee or Alabama, where there are more jobs in these markets here. So anyway, that's what I'm seeing in the market right now. Hopefully this helps you guys. If so, make sure you give us a thumbs up here, and I'll catch you on the next video.